All right, traders. By the time you see this video, it will be morning. I'm trying something a little different so that I won't have to rush so much in the morning to get the video out. But this is my pre-market outlook for February 3rd, 2021. And we will get right to it. I spoke about a rally, or basically a bounce, that was coming on Friday, and on that Friday, even though I was a little early, I bought some 383 calls in the SPY. Maybe Friday after lunch, Friday afternoon sometime. And today we were able to get those calls off for basically double. So that was close to about 103% return on investment. So that trade worked out perfectly. And at that stage, I said that the rally or bounce would carry all the way into Tuesday. Well, now Tuesday is behind us. So what's in the charts and what do I see so far? They are there are probably about four products that I'm looking at to place positions. Right now I have in my scope to do more shorts on the SPY, more on the QQQ and Apple. I'm looking to do some calls or actually call spreads in the VIX itself. And let's show you the areas that I'm talking about. Alright, this is a 30-minute chart of the SPY, and tomorrow at some point I'm going to be paying close attention to the internals, and if the hints add up correctly, the SPY seems to have run out of steam. So I'm looking for this reversal in the SPY. In this reversal, I'm expecting, like a last ditch effort, and it could take place anywhere in this area, this shaded area. This is where I will be looking to put on a short. I'll be looking to find something with a little time, maybe the next 7 to 10 days, maybe a little more time, depending on how urgent I see the drop in the internals. But definitely looking for something over maybe 70 delta on a put to kind of capitalize on a drop that I feel is coming. So I'm going to look for, basically, at some point in time we're probably going to drop back to here or somewhere down to this area. If I was living a little dangerously, I would try and catch the bounce, but being that the internals are dying and we're basically going into a bearish or downward trend, it's too dangerous to try to catch a falling knife right here. So I would rather just wait and see if I can get some type of double double top head and shoulders formation to catch a reversal up in this area. So that's what I'll be looking for most of the morning in the SPY. So we have an area, a very important area, somewhere in this 384 to maybe 385 basically is where I'm looking to see, but it could be anywhere in this general area where a reversal pattern may identify itself. So that's the SPY. The next thing that I am definitely looking for, I guess I'll do Apple right now. And with Apple, looking at the charts in Apple, it seems as though Apple still has some room to run left. I see an upside to anywhere from 136 up to about 137. So Apple definitely still has room to run, but it could go quickly. So meaning we could have a nice pop and then it could die out, and hopefully we get a reversal pattern in this area as well, and that'll allow us to catch a put spread. Or with Apple, I may do just a standalone put 70-75 delta with some decent time just to try to catch this downfall. And I'll probably put a bracket around the order because I don't want to get caught where Apple has a nice short squeeze burst and it ended up going pretty high or much higher than this 137.5. So I would definitely put a bracket around that so that my risks are contained, which I will be doing anytime I place majority of the time. If I place a put option and the options above $300 or $400, I will definitely put a bracket around it to make sure to cap off my risk, because this market is volatile and things could run a long way in either direction. So you want to make sure that you have your risk well defined. So that is pretty much it for Apple. The next thing that I will be looking for, which is probably going to be an important product for me that I'll be looking at, because I won't be trading, more than likely I won't be in the futures market tomorrow trading the NASDAQ. So this is going to be my substitute for the futures NASDAQ trades that I would normally make, and this kind of gives me a better play as far as time and not having to be exact with the entry as you have to be in futures. But again, with the Qs, it doesn't seem to have that more far to go. So right here in this shaded area, between 330, let's say 330.13 and 332, I'll be looking for some type of reversal pattern in here to try to go short on. So that's basically the resistance area that I'll be paying close attention to tomorrow. Now, I'm reluctant to talk about AMC, but I will bring AMC up into the picture because there are issues that I have with AMC right now. Because earlier this morning it showed flashes and hints that it could, some bullish behavior was coming, and then it stalled out. And what I thought about at the end of the day, going back to the Robinhood account that I have and even the Tastyworks account that I have, I think Tastyworks lifted their restrictions. I think I did get that email from Tastyworks. However, Robinhood still had restrictions on the stock itself. And with those restrictions, it seems to be like an induced decline on AMC. It's like an artificial decline. Because if you can see, there are times where the MACD started to gain some traction. You can see it notably here on the hourly, but it just never got going. It never got up enough strength to break through this this 820 area again today. Once it fell through it, it just couldn't muster up the strength to break through it. Even though I was seeing bullish activity, it just could never get going, and I think that is mostly due to the limitations on how and how much stock you can buy in this asset. So for now, I'm gonna just kind of forget about AMC. I do still have shares in AMC, and the reason I'm gonna kind of just put it to the side and forget about it is because if you were paying attention, even when I thought about or first did the video about buying AMC, the first thing that I stress is only buy what you can afford to lose. That's the most important lesson in money management that you will need to heed in any type of investing. And I say it all the time, and making sure you have your risk defined. So with AMC, I'm going to try to just kind of put it on the back burner, leave those shares alone, and just kind of see, like an experiment. You kind of place in the closet and wait to see what happens with it. Come back to it in a couple days and just see what happens. But if we break below this $6 area, more than likely at that point, I'll probably wait for a bounce back up into this $7-8 area, and I'll close it all out. Um, just depending on how and how much longer they have the restrictions on this stock. But I don't want to do that. That's why I say I just want to kind of put it in the corner and forget about it, because with these restrictions, I'm pretty sure this is what the brokerage houses are hoping that is done, is that we just kind of forget about the limitations, and because it keeps stalling out due to the limitations, that we'll give up and start to cash in or sell shares to contribute to this further decline. So that's all I have on AMC. What I will do, let's bring up a chart of the VIX. And in the VIX, I'll be looking to buy either some straight calls, which is very dangerous. I don't really recommend buying straight calls in the VIX. But depending on what type of activity I see, especially if I see a sharp decline, if we get a drop in the SPY or the Qs, because the Qs are known to get kind of bidless, where there be air pockets, and the air pockets lately have been huge. So if the air pockets are huge and we hit one of those air pockets and drop 10, 15, 20 points tomorrow at any given time, I'll definitely be putting on some calls, or buying some calls, or buying a call spread in the VIX. And those are pretty much all of the things that I'm interested in right now. I do have my eye on HYG and one of the retail ETFs. Just to see if any selling does carry over, because I expect if the SPY takes a decent tumble, it's going to spill over into a lot of other things. So that's the reason for me making it a point to look at Apple and think about shorting Apple. There are other plays, but those are all the plays that I'm going to be able to, divide my attention into and kind of focus on over the next couple of days, trying to catch those to see what happened when the market opens tomorrow. So again, a recap, everything is pretty much stretched and has kind of run up a decent amount. So depending on how I see, especially if we get some divergences in volume, I'll definitely be looking to go short in these particular items. I've given you the key levels that I'll be looking at, those areas where I'll be looking for those reversal patterns to take place. So that's pretty much it. That's my game plan for February 3rd. Wishing you profitable trading. And as always, know your risk.